Good morning, everybody. Happy Thursday. It's November 13th, 2025. At about 8:35 this morning, Eastern Time. Great to be with all of you. My name is Bob Lang. It's time for our chart of the, no, not chart of the week. It's time for our daily bites. Chart of the week was yesterday. Great to be with all of you today. So let's talk about markets over here. They've actually been showing a little bit of a bias to the upside this week. This morning, though, however, looks like we're going to be opening up a little bit lower, down about 20 handles on the ES futures right now. Nasdaq down about 90. Dow Industrials off 115. Did hit all-time highs yesterday. Was up real strong on Tuesday and followed through yesterday with some good power. We had some names in the index. The Dow Industrials Index were pounded pretty hard, like Amazon and Apple's down a little bit. We also saw down in Nvidia and a couple of other big tech names as well too. So we're going to keep an eye on that. Nasdaq, for its part, has been pretty weak for the past 8-9 days, and we'll see if that continues on. Russell 2000 also floundering a bit. Was looking for that index to climb above and confirm above 245. Didn't quite get there. We're down to 242 right now, as you can see down over here on the bottom left. IWM closed at 243.60. We're down about $1.50 on that one. So a little more than 0.5% on the down on the Russell. Gold's up a little bit. Silver's backed off the recent highs. Crude oil is down below 60 a barrel now. The dollar index is off a little bit. We're seeing yields down a little bit as well too. So speaking of yields, did you notice this FedWatch futures, the Fed funds futures yesterday and the day before? Made a big move, right? So last Friday, it was expected that the Fed funds futures market was looking for about a 2-to-1 chance that the Fed was going to cut rates next month in about 3.5 weeks. It was about 67% probability they were going to cut, 33% probability that they were going to stay the same. So there's your 2-to-1. So what's happened since? Look at that. Boy, that's a big move, right? And from yesterday, we moved from a 62% probability of a cut, 63, to 4. Now we're at 50%. So clearly, the market is not seeing the chances of a cut happening quite so strongly anymore, right? And we have a lot of data that we have to parse through. The Fed is going to parse through a lot of data over the next few weeks before the Fed meeting happens, which I believe is December 9th and 10th. That's the last meeting of the year. First meeting in 2027 will be at the end of January. So we'll hopefully have more data to talk about with rate cuts then. So it's about a 50-50 probability right now, according to the Fed funds futures market, that there's going to be a cut next month at the meeting. So it'll be, we'll have to pay attention to what's going on. Earnings have been pretty good, actually really good. Cisco last night came in and delivered a real strong earnings. We have some calls on that one, which we bought earlier in the week and late last week, the 71s and 72s. Looks like the stock's going to open up at about 78, $79 this morning. So that's going to be a nice pop on those calls. This morning, Disney, big disappointment. Beat on the earnings, missed on the revenue, and they just can't seem to find their own way over here. And they're down about $4 or $5, retreating back, probably going to make a move back down to the 105 area before too long. If you're looking for some puts, that might be a one to take a look at here. And then let's see, I was looking at high yield junk the other day. I did the off the charts with Jim Cramer on Tuesday, and I talked about the high yield, and this pretty much mirrors the SP 500, right? It's pretty much the same chart, and it pulled back here in October when the markets did, came right back up to new all-time high. Now it could be printing a evening star here, but also more importantly, a head and shoulders pattern. So here's your left shoulder, here's your head, here's your right shoulder here. If we move to the downside over here, now is that going to be damaging? Well, it could be. If we move sharply lower in the HYG, which means spreads are widening and people are gravitating less towards risky assets. We call high yield or junk bonds somewhat of a hybrid between fixed income and equities. It's kind of like right in the middle of those. It does move with equities, especially when the markets or the economy are strong. But there is still a fixed income component there. But they do tend to, they're a little bit, I'm going to say less riskier than equities, slightly less riskier, but much riskier than corporates or high quality AAA credit instruments, or U.S. Treasuries. So it bears watching what's going on here with the high yield and the junk market over here. The charts are starting to look a little bit more bearish. So we are in a seasonally strong period for markets, and that seasonality should eventually take over here. I will tell you this, is that there's probably a good 4 weeks left of good trading going on before the end of the year. And what do I mean by good trading? A lot less erratic trading going on. Now, we've had a lot of erratic price movements over the past week and a half, which has been difficult to manage. We've had some volatility in individual issues and in the futures market as well too. We had huge moves in the futures market the last couple of days, up and down. Yeah, last night we were up like 15 handles, then we went down to 20 handles. Now we're down 20 handles again. So that simply means you've got to protect yourself with some puts. Now the VIX, for its part, has not been moving too much. It's only up about 55 cents right here, which is about 2.5% right now. Not up very much at all, but we're still getting a lot of erratic price moves. The problem is that there's not very much liquidity floating around, sloshing around in the markets right now. And then if there's not much liquidity, there's not much direction, there's not much commitment by big money managers to put money to work into the markets. Well, this is what you have. And market makers have to make a living somehow. What they'll do is they'll widen spreads. You know, something like an Apple or an Intel or an IBM or something like that, which normally has tight spreads between bid and ask. They'll widen them out a little bit, right, to try and create a little bit more activity, get people scared to sell their stocks, and get people more interested in buying to the high side as well too. So anything they can do to create a little bit of action or activity, that's what they're going to do. So that's going to be it, everyone. Have a great day. Again, take it slow, take it easy today. In the chat room, we're just not going to do too much right now. We haven't been doing too much the last week and a half. Don't want to get yourself in trouble here. If you've had a good year so far, you don't want to give all that back in the next 5 or 6 weeks and then have to start over again in 2026 and saying, what happened? What did I do wrong? Be disciplined, be humble, and, take your profits when you can, and keep those cash levels really high right now. I think that's important to do, so get ourselves ready for whatever the next move is going to be. It's going to be up, it's going to be down. Who knows? Just have to get ourselves ready for that. All right. Have a great day, everyone. I appreciate everyone spending a little bit of time with me. I'll see you guys all back on Monday morning, and enjoy a little bit more KC and the Sunshine Band as we go out.